Yeah, you guys are muting. Everybody's off camera.
Good morning, or not good morning, good evening. All the days are the same now.
Good evening, guys. Good evening.
And we will also be on Facebook, people. Good evening, guys. Happy New Year.
Right.
Thank goodness for 2020 ending. The heck with 2020.
We know everybody's ready to move on from 2020 for sure. Anish, do you see the full screen or the half screen right now?
Give me one. I see the half screen.
Okay. Now you see the full?
Yep, there we go.
Good evening, guys. Welcome. We'll give a few minutes for everybody to come on in, stop at the bar, grab a drink. This is only water. I'm presenting and driving tonight, so I can't drink.
You know, that long commute.
Exactly.
Everyone's stuck in traffic.
Yep, you guys have no excuses now.
Good evening, guys.
Yeah, we had over 350 people register for this meeting tonight, so we know there's going to be a lot of people attending.
Good evening, guys. And while you guys are kind of actually just getting situated, throughout the evening, we'll have a couple quick polls. And we're always just trying to figure out where people actually hear about today's event. So my first poll up here is, how did you hear about today's meeting? How many of you guys are super Bria fans? Miami-Dade Bria fans? Hopefully a few of you guys. Oh, look at that. You know, Ryan, some people like your beard, I noticed. I know Steven's from Boynton Beach. We always like to see, where is everyone from today? So where are you watching this?
Yeah.
Last time we had a couple of people from Colombia. We had people in Costa Rica. Violet, hey, Happy New Year, Pompano Beach. John's a Bria fan.
Oh yeah. I was just emailing John today.
Oh yeah?
He's bringing us a probate property.
Yeah. Got a West Kendall, I got Coral Springs, Davie, Florida.
That's not far enough. We need somebody further.
Plantation.
In New York right now, or Chicago.
Margate.
Oh.
Oh.
We do have a Chicago, Illinois. Is that where you're from, or is that where you're at tonight?
Elton, I know you're where you are. You're in Miami.
Yeah.
From Chicago, though. Brothers in Chicago.
Welcome, guys. Those of you that just came in, we just threw up a poll on the screen. Give us your answer about how you heard about today's event. We're always trying to improve and increase our marketing efforts.
Yeah. Hopefully you guys are also on our text messages. We'll put up that phone number too.
Yep.
We want to make sure, you know, we're not here to spam you. If you're like Ryan and I, you get about 1,000 emails. I always forget. I always check my text messages.
I just got a junk cars text message today. So no, we're not going to send anything about junk cars, or if you need a new warranty for a car you sold many years ago, like I get all the time. That's just to notify of upcoming events. Yeah. Good evening, guys. Those of you that just joined us, welcome.
We put it in the chat, our text message service. So go ahead and sign up. It's free. Free. I hope everyone had a good New Year's. Relaxing, enjoying it with family, being safe.
And ready to move on in 2021. All right, guys, we're going to go ahead and get started. So welcome to the first official BREA and MD REA meeting for 2021. We're very excited to, obviously, everybody is, to put 2020 behind us. New year, new time, and it's going to be a very explosive real estate market. And that's what we're going to talk to you guys about tonight. We generally do, for those of you that are new to BREA, we generally do our January meeting to start the year off, right, Anish? We always want to let them know, hey, what are we forecasting for the new year that's coming up?
Absolutely. I mean, it gives us a good idea. And you know, Ryan and us actually being in real estate for so long, every year is different. And that's why I'm really excited about our panelists today. I mean, these guys are the most accomplished guys in their fields locally. And I know we get to chat with them all the time. It's great to let these guys all in on what we chat about.
Absolutely, absolutely. So for those of you guys that are new, just really quickly, I'm Ryan Kuhlman, president of BREA and MD REA, and Anish.
Yep, I'm the other owner, and we also own WJL Financial, our wholesale side of the division. And not only are we coaches, we're true investors, and we're the owners of the largest REIAs in South Florida. Chapter of National REA, and Ryan's actually your president. So 2020 and 2021, that's 40,000 plus members, 120 chapters and affiliates. So hopefully you will have a safer 2021 this year versus a pandemic in 2020 for you.
Yeah. And guys, you should be on our email list because we, the National REA, we do a call every single month. And we will, give you guys some updates. We actually have a very special guest this evening that's going to be joining us about 7:30, and that's Charles Tacher, the CEO from National REA. He is what I call the man on the street. He's the guy that is the constituent to Washington, D.C. He deals with senators, congressmen. He's going to be coming on tonight to tell you guys about the latest of what's going on with the moratoriums. And just so you guys also know, we're not going to bore you with the whole, life story, but Anish and I both, as real estate investors, lost everything in the crash of the last market. So we really know and understand, what these markets, the fluctuations and the changes in the market. And that's why, we're starting to see the signs now, and the obvious sign from the pandemic of how many homeowners, unfortunately, are not able to pay their mortgages. It's a lot more homeowners that were not paying mortgages now than it was in 2007 and 8. So, Anish and I, already experiencing that, we don't hope for things like this, but I can tell you that over the next 3 years, we're going to be very thankful that we are in real estate. And if you're not in real estate, you're going to miss out.
Absolutely. And just to give you a quick update, Ryan, just to give you an idea, there's about 3.5 million people right now in forbearance. Wow. So what that means is they're skipping their mortgage payments. And, one of the other things that, some of the new stats that we found out since the pandemic, according to the Economic Policy Institute, there are about 25.7 million people that are either officially unemployed, out of work due to the pandemic, or have had a reduction in pay. Wow. So, that's the reality of what's happening out there. What that means for us, being on the other side, it's going to take investors like us to get through this. And there's, we don't root for these things. We're unfortunately on the other side last time. But on this time, we're sitting on some cash, and basically for our point of view is that there's going to be a lot of opportunity, and you got to really place yourself at the right time and have all the pieces to do deals, and that includes having money and a team. So,
and like Anish said, we don't hope for these things, but the reality is that most of the houses that we have purchased over the last 10 years at the end have all helped a homeowner out of foreclosure or needed cash to pay off, their IRS or taxes or whatever the situation is. So we love those win-win situations. So really quickly, before we get into the meat of it, guys, let's just give you a couple quick announcements, as we always want to make sure you guys are informed of any upcoming events that we have. For those of you that do not know, January 30th and 31st is our boot camp. So if our boot campers are on the chat right now, give us, one word of what you thought of what the boot camp, or you can make it 2 words. What you guys thought of the boot camp. I know we have some boot campers here tonight, but this is a 2-day intensive event where Anish and I are going to teach you guys the A to Z of everything that we do in our mentor program: wholesaling, flipping properties, how to analyze properties, how to create your marketing and branding and business card. We're going to be having some special guests that are actually here tonight that are going to be coming to the boot camp. Jose Ramirez, owner and chief strategist of Advanced Tax Advisors. He's going to be talking about, how to buy properties the right way, protect yourself tax-wise, how to form your corporations. Kevin Tacher, of course, always from Independence Title, the title king himself, is going to be teaching you guys a little bit about double closings and assignments of contracts. And we're also going to have Carl Sheely. He's our contractor, a main contractor for Bria for 25 years now. This is his 26th year with Bria. And he's going to be virtually, we're going to take you guys around, show you guys some houses, analyze them. And then Anish does some cool stuff on Sunday with the breakouts. You want to tell them about the breakout session?
Yeah, so the cool thing is what we really do is we take all the stuff that you learned all weekend and we break you up into teams. And the idea is a homeowner says, listen, I'm sick and tired of all these investors calling me. I'm ready to sell my house. What's your best offer? And we break you up into 5 or 6 teams. And you guys are going to come up with offers, exit strategies, and then you guys get to present it. So it's pretty cool. It's everything that you learned, and then we'll tell you what really happened. So it's an intensive 2 full days. It's not just Ryan and I spewing information. It's really, we want you to be in action. We'll show you some real deals that we're doing down here in South Florida. Hopefully, if you guys have been following us on Facebook, you'll know that Ryan and I actually bought a house for $50,000, used our self-directed IRA. And not only did we use our self-directed IRA, it was a Roth IRA, and we made almost $120,000, so tax-free. So there's
during the pandemic.
Yeah, during a pandemic. And then, we've also had some students. Couple of Joe and Victor had a deal over 100,000 in profit. Yep. Had I think a second deal over 55,000. And these are
change, absolutely.
And these are wholesale deals, guys. So this is not us rehabbing. Yeah. So it's 2 full days of real information. And then do you want to go ahead and tell them what your guarantee is?
So this is a guarantee that I've made every single year, is that you come and take our boot camp. And I'll tell you guys right now, under normal circumstances, we charge about $1,000. It's $995. We're doing this as sort of our pandemic pricing. And because we're doing it on Zoom, we don't have to get, the hotel room with, and the bus that we take you guys on tour to take you around the properties. And so if you come and take our boot camp, anyone that takes our boot camp, come to me on Sunday at the end of the day, and you tell me that you don't think that you got whatever you paid for the boot camp, whether you're a member or non-member. If you don't think you got your money's worth, I will literally, no questions asked, write you a check right then and there. And the reality is we've never had a single person ever say anything even close to not getting their money's worth. It's always the opposite. It's like, man, I didn't realize I was going to learn this much in this boot camp. So you guys have nothing to lose by taking the boot camp. And a great lead into that, January 14th and 16th, you're not seeing double. Yes, it's the same event. We wanted to offer it at 2 different times because we know people's schedules are always different. So Thursday, January 14th, next week from 7 to 8 p.m., that should say p.m. on there, wholesaling and flipping properties during a pandemic. That's a free online event that Anish and I are going to be teaching you guys about how we wholesale and flip properties right now during this pandemic. Some of the deals that we've been talking about, we'll talk to you guys about those as well. And then we're offering it again on January the 16th on Saturday from 11 a.m. to 12 p.m. Okay, so this is wholesaling and flipping properties during a pandemic. It's a free online event. All you have to do is go to bria.com, upcoming events, and you can register for that event. Okay.
And I just want to thank Nancy. I know she put it in the chat. It's only to the panelists, but she said the boot camp was phenomenal. You'll be amazed at how much you learn. These guys are great teachers. Thank you, Robert, for saying these guys are the real deal versus us being fake, I guess. Huh? Thanks, Robert. So those are just some of the things. If you guys don't put the attendees on there, only us panelists get to see the great things that you said about the boot camp. So
yeah. So the text message service that Anish was talking about earlier, text the word BREIA, B-R-E-I-A, to 954-737-3239. This is only to give you a heads up of upcoming events. No, we're not selling you products and services. So join that text message group, because like people that were on the text message, they got a text yesterday that was telling them, hey, in 24 hours is the BREIA meeting. And then they got a text about an hour ago, I believe as well, to tell them, hey, the meeting is in an hour, don't forget. So it's a nice friendly reminder. We all get busy sometimes. So it's nice to be reminded when there's an important event.
And Ryan, just, you know, I know it's a new year. Why don't we do something for the 14th and 16th, especially for the newbies? How about we raffle off a boot camp?
A seat for the boot camp?
Seat for the boot camp.
Okay.
So how about we'll do that on the 14th and the 16th if you've actually gone to a boot camp. That'd be a nice gift for somebody. So we'll go ahead and
2 boot camp seats, one on Thursday and one on Saturday. So 2 people have a chance to win.
Yep, exactly. So we'll go ahead and do a raffle, but you have to show up. So no excuse. We might actually pay you to be in our boot camp. So that's pretty cool.
Imagine that. So also, Anish had said earlier, we are part of the National RIA. They are the chapters to National RIA for Broward and Dade counties. We're the only chapters of National RIA. And, you know, I like the analogy that Anish gives to people to when they say, well, what's the difference between your real estate investor association, your club, or somebody else's organization? Well, the difference is that you take a handyman and a licensed contractor. Sure, you can find a good handyman, but without having licensing and insurance and everything else, you got to be very careful. That can get you in some big trouble versus having a contractor that is licensed and does everything permitted. That's BRIA. That's who we are, because National RIA every single year makes sure that our corporate individual memberships, our education programs, our mentoring program, they make sure that everything is still on par, that we are doing what we're supposed to be doing, our community service that we do, which we would do those things anyways, but it's good for you guys to know that the National RIA is keeping us honest as well. So the member benefits, because we are part of National RIA, we have over 40,000 members in 120 chapters throughout the country. So that gives us a lot of collective bargaining power, and we have leverage over companies like Home Depot. We have the largest Home Depot program in the world through National RIA. I deal directly with the owners and corporate members of Home Depot. We actually went to a really nice convention last year. Home Depot does a convention like nobody else does because they've got the money to do it. But we do a $1.8 billion last year, or 2019. I know the numbers were a little bit less last year, but we do over $1 billion a year with Home Depot of all of our investors, and it's a 2% cashback program. So guys, if you are a contractor, or if you know a contractor in your family or someone, have them give us a call. We have a special membership that contractors can sign up for. There's really not much cost in it, but they'll get 2% back. So every 6 months, you get a check as a contractor for every dollar that you spend at Home Depot, as long as you're spending over $5,000, which I know most contractors are. We have Rent Perfect. These are investigative screening services. So for all of you landlords out there, Rent Perfect is the best tenant screening service on the planet. Very easy to use. Equity Trust. Anish just said we used our self-directed IRAs, who we have through Equity Trust. And we were able to flip a property and make over almost $120,000 tax-free. So Equity Trust can help you with those needs. Arcana Insurance. We have several properties that we've closed on that we're either going to rehab or we're waiting to sell them and wholesale them. So Anish puts insurance on them through Arcana. How long does it take you to put insurance on a property, Anish?
As fast as I could type, probably 30 seconds.
Yeah, I'll walk past his office getting water in the kitchen. I'll come back and he's like, oh, we're insured already. So I'm like, oh, okay, good. Office Depot, Office Max, everybody knows who they are, but for printing and paper and all kind of different supplies, there's some good discounts there. And then IDI, the globe at the bottom, is one of our newest members. Now, Anish and I, we've actually been doing business with IDI for a little over 2 years now. They're right out of Boca. They are one of the #1 data companies and data sources in the United States. Most people that do data get their data from IDI. We're just very fortunate that we got to meet them and we got them into the National RIA as well as a national vendor. So we get special discounted prices for all of your skip tracing services. Need to find that homeowner, need to find the person that owns that mortgage, or maybe you got a probate property and you can't find one of the heirs. IDI is the place that you get that data, skip trace them, try to find a phone number, email address, so on and so forth. So those are all of our services. Anish, did I miss anything?
Nope, you got it all. You got it covered.
All right. Well, what I'm going to do real quickly is we're going to just introduce our panelists here. So if we want to have our panelists go ahead and join us.
Perfect. And Ryan, just while you introduce them, one of the quick things is we do have our one-on-one mentoring. So I'll just put a
Okay.
quick poll up there if you're interested in our coaching program. And when you check us out on the 14th and 16th, we'll go ahead and talk about it while Ryan go ahead and introduces our panelists. So,
All right. And keep in mind, guys, we just said that 2 of our new students just during this pandemic closed 2 deals. One was over 100,000, the other one was over 57,000. So might want to check out that mentoring program. All right, Mr. Jose Ramirez, are you with us, sir?
I am. My video's been blocked, I guess. You guys didn't want to see me.
Well, we'll get that taken care of here in just 1 second.
All right. So my name is Jose Ramirez, and I am the Chief Tax Strategist at Advanced Tax Advisors. We specialize in tax planning and strategizing tax compliance for real estate investors and some e-commerce. You know, we do things like cost segregation studies, advanced strategies for tax savings. That's a little bit about us.
And you guys have been a corporate member of BREA for many years. You do all of our corporations as well as all the corporations for our students as well, and
That's right.
tax planning too, so don't leave that out.
I forgot all about that.
All right, the title king himself, Mr. Kevin Tacher.
Good evening, everyone. Welcome to the call. Thanks for inviting me. My name's Kevin Tacher. As Ryan said, we're one of the title companies that the BREA guys use. We've been doing business with BREA before Ryan and Anish owned BREA with the previous owners. So we've been around for almost 20 years doing tons of real estate closings. We speak at their boot camps, which is great, by the way. I encourage you to sign up. But we definitely are able to talk to you about double closings, assignment of contracts, wholesaling deals, rehabbing deals. Previously, I was in the mortgage business, the real estate business. So, you know, one of the things that sets us apart from everyone else is we understand the deal and we understand how to make sure the deal gets to the closing table, where a lot of title companies you're dealing with, they don't even understand title, let alone the other areas of real estate in order to really help you succeed. So if you have a question, you give us a call, we're able to answer the question for you as opposed to just trying to send you somewhere else. So hopefully we'll answer some great questions for you. We'll see you at the boot camp, and thanks for the invite.
Absolutely. And like Kevin said, he's been with us for a long time. He is our #1 title company, investor friendly. His team is amazing. I mean, literally over the holidays, Anish and I were closing 2 deals with Independence Title, and his staff didn't really care, you know, Christmas Eve, whatever, the weekend, you know, his staff is always making sure that things get done and we get our closings done. So, you know, if you guys have title needs, and I don't care if my other title company's here, that's just my #1 title company and always will be. So, Mr. Paul Regan.
Thank you. I'm glad to be invited. I'm not saying I'm an old guy. $60 worth of hair dye does a lot of wonders. But I remember when Kevin joined BREA. I've been a hard money lender for a long time, but primarily now what I'm doing is refis of existing properties. And I have a program now. If you buy it, I'll lend you money to buy it, to fix it, and then refi it so that you can get all your money back out and still hold the property. And you give up that immediate cash that you make from flipping the property, but you have income for the next 30 years. And that's the way to build wealth. Right now, rates are falling down. I'm doing investor loans at 4.5% for refis.
Very nice. All right, very good. And Paul, he's not only just a hard money lender and a member of our organization. Paul has been kind of a mentor to Anish and myself, and we've just appreciated his support over the years. And you know, it's an advantage to have a hard money lender that also, you know, had spent so many years. I'm not saying that he's old, but he spent many decades flipping properties and doing his own deals and things. So he knows the business in and out. So, and Paul's real easy guy to work with. So give him a call if you need some money. Now, last but not least, Mr. Conrad Grant. How you doing, Conrad?
Hey, I'm doing fine. I was distracted reading my own bio for a second. My name is Conrad Grant. I am one of the partners at Kelley & Grant, PA. Many of you probably know my business partner, Jaron Kelley, who could not be here today, so I stepped into his shoes. But Kelley & Grant is a real estate law firm. We handle mostly landlord-tenant. We are known for that, landlord-tenant law, real estate law in general, including litigation, whether it's a quiet title issue, which we do a lot of those, quiet title, or dealing with homeowners associations, real estate closings, and so on and so forth. So we're a full service law firm in the real estate realm. And today I'm going to be talking to you about landlord tenant law and the state of the local moratoriums in our counties and how that's affecting investment properties.
Yeah, absolutely. So we've been doing business with Kelley and Grant for a few years now. And I mean, these guys, just during the pandemic, the things, we had a probate property, we needed a quiet title action done. These guys got it done like super quick for us. We've had squatters and things, people that we needed to get out of properties. So Kelley and Grant has been, you know, another power team member of us here at BREA, and we refer them out all the time. So if you guys have any real estate needs for attorneys, these are the guys to contact. So don't hesitate. All right, I'm going to stop sharing my screen now. And what I wanted to do really quickly, just because he is actually now with us, I had kind of said earlier, guys, that we have a very special guest this evening, and we're only going to have him for a few minutes because he's actually traveling right now, but he was gracious enough to tell me this afternoon that he would join us. And I like the in the car at nighttime seedy kind of looking thing. This guy's a pastor, couldn't be a nicer guy, but he looks like he's about ready to do something here. I don't know. Yeah, exactly. He's a hitman or something. So, ladies and gentlemen, this is Charles Tassel. He is the COO of the National Real Estate Investors Association. This is what I refer to as the man on the street that has the word, direct from Washington. So, ladies and gentlemen, Mr. Charles Tassel.
Thank you, Ron. I appreciate it. And sorry for the lighting effect here. I was trying to adjust that. Actually, and my phone is still blowing up because it's been, as everybody's seen the news today, it's been a crazy day. So I would encourage everyone to reach out today to somebody you've disagreed with in the past and try to mend fences. Let's start that process. We need it for our country.
I like that.
I like that. I like that.
You know,
So Charles, the reason why I asked Charles to come on tonight was because, you know, we get a lot of questions about these moratoriums. Conrad's going to really go in detail to questions about the eviction moratoriums. But as far as the word from Washington, you know, I just wanted Charles to kind of enlighten us a little bit on what's the latest word that he has. So Charles, you want to tell us a little bit about, you know, what's going on right now? What can we expect over the next month or two?
Sure. So what we've been seeing over the last, especially through December, is a variety of extensions from whether it was the CDC side of things or specifically on foreclosures. FHA has been stepping out and kind of doing these slow step, like, well, we'll go a little farther. We'll go a little farther. They expanded it to the end of January, and then they decided, you know what, we're actually going to expand to the end of February. They're looking at February 28th now. And that is for everything with an FHA mortgage on it, because that's technically what they control. Now, what I'm hearing behind the scenes is FHA is also leaning on banks saying, hey, you want us to take your loans? You need to do the same thing we're doing. So there's some pressure behind the scenes going on. It's not official, but they're looking at the banks and watching to see. So that, as we call it, that pipeline of foreclosures, and we know it's not fast, it does take time to move those through, is really getting pressure from DC to slow those down as much as possible, to not move forward, and for all the private banks to follow what the FHA is doing, which right now is a foreclosure moratorium through February 28th.
Okay. So that does mean that there potentially still can be homeowners that are losing a property to foreclosure if they're not FHA. Is that correct?
That's correct.
Okay.
Especially smaller mortgages, smaller banks, banks that don't necessarily are maybe holding mortgages themselves and not necessarily passing stuff off to FHA. Those are ones specifically that be of good interest for investors to follow up with. Okay.
All right. And what's the likelihood? I know this is kind of a crystal ball question, but this is the crystal ball panel tonight for 2021. What can we expect as far as, you know, in February? Can we expect at the end of February where they're like, oh, we're going to extend it to the end of March now? Kind of like what they did last year with the state of Florida moratorium.
Absolutely. I would expect to see moratoriums getting kicked down the road across the board. And that's a great concern, because with the new administration, there will be new rules coming in. and there might be a change in even what is currently being processed. That's part of why behind the scenes, there was some discussion with the incoming administration to say, hey, we want a little more time to look this over. Can you move it to the 28th? That's belief where the 28th came in, so that there's more time for a new administration to set some staff up, to come in, hit the ground and go, okay, here's the time we really want to set. And we're still not sure if they're going to say, hey, we're going to do a month and keep kicking it down the road, or if they're going to say at 6 months, but it's only for these properties. Right. So right now it's really going to be in February. And I'll say, Mr. President, as a president of the National Real Estate Investor Association, as you well know, February is probably going to be a big legislative time. So not only are we going to see regulations, we're going to see legislation, and that's going to affect everything from money to how things are processing. So if you can build the relationships, build them and get them in place.
Okay. And any insights on, bailouts as far as, I keep hearing, people that are behind on their mortgages are going to get some money to bring their mortgages up, to current, which sounds kind of, I don't know, it sounds a little bit complicated to say the least, but any word on anything like that you hear circulating in Washington? So
I had a couple conversations with our lobbyists today even, and part of the discussion is based on, because of the Georgia turnout and the Georgia election being called for, both senators being Democrat, that moving forward, it is expected that there will be a larger package moving forward. The House has said they've got a larger package, and it would include such things as that. You might look at the pattern that was set with the emergency rental assistance funds, which was set at $25 billion to start. And the expected need is somewhere between about 52 and 72 million, or 72 billion, excuse me. What's a few billion between friends, right?
Right.
So somewhere between that 52 to 72 billion, there's still a gap because we're only covering 25 to start. So the expectation is that kind of a model may then be used for foreclosures. Having said that, you start getting into huge dollar amounts, and how much of that's going to be acceptable. So okay, in February, we'll probably know a lot more and get that information out to you as soon as we can.
Awesome. Okay. Anish, any questions that you see that came in maybe for Charles before?
Not for Charles, but it'll be for one of our panelists. So.
Okay. So, well, listen, we greatly appreciate it, Charles. Thank you so much for the update. We do have a national RIA call that's coming up in another week or two. Okay.
13th.
So,
yep.
Yeah. So guys, if you want some more information, we will be doing a national RIA call, and Charles will be there to update us as well. And like he has said, and everybody else is saying, I just talked to Jose Ramirez. I got his email earlier saying, man, things are just changing like every single day. So I'm sure there will be some updates in the next 2 weeks, for sure.
Absolutely.
All right.
Thank you very much.
Thank you so much for coming. Really appreciate it.
Thanks, gentlemen.
Okay.
Bye, guys.
All right. So, so far, do we have any questions we want to take?
Yeah, I actually got a good question from John. The question is, are there any government regulations slowing or stopping hard money lenders from foreclosing? So, Paul, what do you think? You lend some money?
No, there's none. There's no legislation, but the problem is the judicial system is slowed down. They're locked up.
Yeah. And what I would say, right? I mean, being in lending and being in finances, if you are, you do have a hard money lender and you're having some issues. I know you, Paul, personally. I know you've worked with other investors or worked around, or did workarounds, I should say, versus,
right,
avoiding the phone calls. That is what not to do. Communicate with your lender if you're having some issues with your deal, right? Or any other tidbits you would suggest that might say?
Your lender always has somebody else that'll take that deal for you. If you're in trouble on a deal, remember, I have customers every day calling me looking for deals. All of my customers are investors looking to flip houses. So if you're in trouble on a house, call me and let me know. And I have somebody that can probably bail you out.
There you go.
There you go. Exit strategy. So, well, the overlying theme of the meeting tonight is talking about 2021, but of course we can't talk about 2021 unless we talk a little bit about 2020. So what we can do is a quick kind of round robin, guys, and everybody can kind of give a little bit of their take on 2020, what they saw in the aspects of the market, in their industry. I'll go ahead and just start from a wholesaler's perspective and rehabber's perspective as well. And obviously, some of our other panelists can also speak on the rehabbing portion, like Paul, lending money to rehabbers. But Anish and I, we were wholesaling properties even in March and April when we were literally on the quarantine and everybody was at stay at home. We were still able to get rid of a property in Hollywood, thank goodness, and still got a really good price for it. And that's something that we definitely noticed, or that I noticed, that I didn't see, any real drop in pricing. I didn't see, that people were like, oh, we're not buying properties now because it's the pandemic. I don't think I heard that from any of our buyers. And we have about the largest buyers list in the state of Florida. So we were still able to wholesale throughout. Our own acquisitions people, because like Anish said, we own WJL Financial or WJL Properties. And we also have students in our mentor program that are out there knocking on people's doors, putting the mask on, stepping back, social distancing, and getting deals left and right. We have signed up almost 30 short sales in just the last couple of months. So there are homeowners that are starting to feel the pressure and understand that, whatever the moratorium is, it's not going to last forever, and it's not going to also apply to everyone either. We did a couple rehabs during this pandemic as well, all the way from Deerfield Beach down to Miami. Yeah. And myself, I did a couple of rehab projects as well in Ohio. The markets have stayed true as far as pricing, although I would say that towards the end of this year and right now, I think that the market has slowed down just a little bit. I don't know if that's just, a residual effect from the holidays, because properties that we list, for sale in November, October, September, they fly off the shelf. The properties in December, they're still listed now and we're still marketing them. I'm sure we're going to sell them. But as far as 2020 goes, it was a difficult time in regards to the beginning of the pandemic. And then obviously, we had to do a lot at BREA to try to, meld with what's going on with the pandemic and the social distancing and not having meetings and face-to-face. But as far as our core real estate, which is what we do, we don't just have meetings. We don't just educate people. We are investors. We're trying to flip properties and wholesale properties every day. And from May on, we didn't feel as much effects as we thought we would. A lot of people said, oh, it's the pandemic. I'm not doing real estate. I'm not going out and getting properties. Well, that's fine with us because, we were still able to get properties. And we've actually even expanded WGL Financial and WGL Properties. Anish and Taryn we got our website up, new website up, our new system running. We've added to our buyers list. Anish, how many buyers did you add to the list this year?
A little over 1,000. And one of the things, actually, I want to even talk about the pandemic, right? So it was scary. I mean, when it first happened. And one of the first things we had to learn how to pivot. Right. So we actually literally we bought a house with Tacher actually, and we were going to go rehab the house. The pandemic happened. Some of you guys that know my wife, she's a little crazy on the pandemic. And so I was in jail for about a month, meaning I couldn't leave the house. But what happened was basically we actually rehabbed the house virtually, literally with our contractor. We were able to actually do a rehab via WhatsApp. So it actually didn't slow down things. If you would ask me before, can I do a rehab through WhatsApp? I would have probably said no. and amazingly, we were able to do it. So, I mean, 2020, what it really taught me was, there's going to be some fear. What you don't know, you're going to be afraid of. But how are you going to get through it? And then not only get through it, how are you going to excel at it? And luckily, even on some of these panelists, I see some old timers on here that have been through a bunch of wars. And, and Paul was one of them. He got a call from me and he goes, don't worry about it. You'll be fine. You'll just have to do this. And that's what you start learning when you have a big group of people around you. I know Kevin, I think he went from doing 100 deals to maybe 98, maybe he lost 2 deals. I don't know, a month maybe, or maybe he even did even more. So it's just kind of funny. I know Jose is actually, he's doing more cost segregation and, he's got more investors buying. And then I said, oh yeah, wait, all these guys that are, the head of our industries locally, they're all killing it. And that all of a sudden it just changed my mindset. And if anything, the pandemic has showed is that hey, we could get through anything and thrive. So I think that's what I would say about 2020 for me.
Yep, absolutely. Paul, you want to go next?
Yeah, I think what happened in 2020 was, you've always heard that 90% of the deals are done by 10% of the people. And those people that have always found an excuse not to do a deal have left the market. And so those people that are out hustling are actually doing more deals. My good customers are doing more volume now than they ever have been, because the competition for finding the property is less. Yeah. And so if you're sitting out there on the sidelines, you're probably making it easier for the guys that are out there hustling.
No doubt. Well said. Mr. Tacher, how was your 2020?
It was fantastic. You know, I think Anish used a great word, and it was pivot. It was, you know, we talk about it at the boot camp a lot because, you know, both of you as well as myself went through the last crash, and we got hurt pretty bad. And you know, I wrote a whole book about it, which was titled Rescue Your Business, which kind of talked about setting your business up for success. So this way, when the next market crash hit, you would be set up for success. Who would have thought a global pandemic would have hit? But those same principles can be used. So I think one of the things we learned to do is just, we learned to pivot our business, and we learned to cut back where we needed to cut back. And the reality is we did less deals than we thought we were going to do, but somehow our revenue was up, and the revenue was up because we learned how to look at our expenses. We learned how to look at our overhead, and we learned how to look at where our deals were coming from. And we just restructured our business a little bit, but we were proactive as opposed to reactive. So we've been setting this up for quite some time to know that whether the market was going to crash, you know, 2 years ago, a year ago, we didn't know, but we've been ready for this. So when this hit, we were already doing online closings. We were ranked number 10 in Palm Beach County, and most of my business is in Broward, so I don't even know where we ranked in Broward. But we were number 10 in Palm Beach County. So we do fully automated closings, where a lot of these other title companies, they can't even figure it out. They call us to do their closings because they don't know how to do it. So, you know, I mean, if you just learn, if people on this call can take away one thing, to know that obviously we're hoping that the downside is that it's going to be negative what's happening to people. But the upside for real estate is that we should have a thriving market for the next couple of years. But if you learn to set yourself up, so in 2 or 3 years from now, when that market turns, you're going to be able to survive it. You'll stay in this business and thrive for many, many years. So that's the one thing I think you can take from this before we talk about 2021 is next time you go through a market crash or anything like this, just set yourself up for success. So this way, when it happens, you're ready for it, which I know you guys did as well as us.
Right, absolutely. And guys, before the next panelist talks about their 2020, there's 2 sections at the bottom of your screen. One says Q&A, the other one says chat. If you put your questions in the chat, we might miss them because as questions and things come in the chat, they don't get repopulated to us. So if you guys have questions of any topics or anything we're talking about tonight, we want this to be interactive. So if you guys have questions, just put your question in the Q&A and either Anish will answer it for you, online, or we'll have one of the panelists answer it as well. So Jose Ramirez, how was your 2020?
My 2020 was good. We grew significantly, and my clients did too. My clients are doing well. We've been a virtual firm for many of our clients because we have clients in different states. So we were already adapted somewhat to the virtual consultations and all that. But COVID, what the pandemic did was really make it more the way of doing it, right? More on a regular basis. But yeah, surprisingly and amazingly, my clients are doing well. Everybody's adapting well. I've gotten to spend time at home, working from home some of these days, which is great.
That's awesome, man. That's awesome.
It's all about adapting.
As well.
We hired a new senior tax advisor, so that's shows that the people are making money still. The people that are adapting, the business owners, they still need the help.
Yeah. And guys, like we said, pivoting and adapting. So what Jose is talking about where, he was really kind of used to this before, the systems and stuff that they use, he formed 2 corporations for me during this pandemic, and all of the paperwork and everything, I didn't have to, go to his office or anything. I love seeing the guy, but literally he has, what's the system that you guys use where you do transfer all the documents and all that?
Oh yeah, we have a portal. I think I did it while I was on vacation.
Yeah.
You know,
Hey, that's fine, man. As long as it gets done, I don't care if he's hanging out my ties all day. But it was just kind of cool because our title companies are doing that as well. Like, you know, for Independence Title, if we have to have people come in to do closings like sellers and stuff, you know, obviously they get the fog machine out and do everything that they have to do, but we can still adapt and do a lot of things via email and everything else, like working with Kelley and Grant and the team over there when we did our quiet title action. You know, we can get all the documents, DocuSign, and all the stuff. They now have electronic notaries that you can utilize, so that helps us out. So, Conrad, share with us a little bit about how, how was your 2020, and you know, translating 2020 into 2021.
Sure. I'll dispense with the happy stories. No, I'm just kidding. It wasn't for the firm itself. I think things turned out well. We were able to pivot. We had been diversified, homeowners association, litigation, landlord tenant. So we were able to survive this, even though landlord tenant pretty much ground to a complete halt. So investors, people are landlords, people who own single family or multifamily homes, whatever it was, they couldn't evict tenants. So tenants weren't paying them, they couldn't evict. And, 10 months later, most of those investors, they're stuck with non-paying tenants. So, that's the negative part. But the good news is, during that time, we found some ways out of getting, having all these landlords being stuck without money. So we would start saying, well, did your lease end? Let's terminate leases, month-to-month tenancies. Do you have those? Let's work. Instead of trying to collect money, let's try another way to get this in front of the courts, and then it will force the tenants to do rental assistance. Because for the landlords, some landlords are trying to wait this out and trying not to do any evictions, trying not to serve 3-day notices, and the tenants refuse to move forward or even pay $100 toward their rent. So taking this to court forced them to then actively apply for rent assistance, which then helped the landlords out. So we have things moving again, and there are evictions taking place. If it's a lease violation, those are still going on. Month-to-month tenancies, non-renewal of leases, those are still going on. But for the first 4 months, the judges couldn't figure it out. So the other lawyers couldn't figure it out. Legal aid couldn't figure it out. So every case was stuck in the system. Now, if you have properties in Miami-Dade, I could get into that later, but they are not executing any writs of possession, and it's been 10 months. So, but we're finding ways around this, and hopefully, there's a way out in February.
Right.
But that's where we are. But the firm itself did well because we were able to diversify, and we kept our entire staff, even those who weren't working. We had 17 people, and we kept everyone. Main thing, I guess, refinances started happening. Everyone was refinancing, and that kept everyone employed and everyone going until the courts were able to reopen.
Good. And right now, what is the official moratorium that we're working off of in the state of Florida for tenant landlord? Is it January 31st?
Yeah, it's the January 31st, and that's the CDC moratorium that took effect September 4th, and it got extended on December 27th. And that's in effect until January 31st, but you never know. With the new administration, that could get extended. So fingers crossed that at some point it ends.
And right now, what would be some reasons that a landlord cannot evict a tenant?
Well, the landlord can start evictions. You can start evictions for even non-payment of rent. You can start. The CDC says you cannot do that final execution of the writ of possession, which is the removal by the person. So you can get final judgments, and You just cannot remove them for non-payment. If you're terminating month to month, or it's a lease violation, writs of possession can get executed, except in Miami-Dade, which just have a blanket statement that we're not executing any writs after March. So you can do evictions, and it forces people to actually apply for rent assistance.
Okay. Now, actually, this question is going to apply to us. I haven't talked to Anish about it yet, but one of our students has a short sale, and we got the approval. We already have it sold, and we're actually dealing right now with a sort of a pseudo tenant. They were an ex-boyfriend that just kind of stayed behind in the property. The mortgagee, the mortgager, she didn't know he was living there. And so, what would be our options now? If I call you guys, which I would be emailing you guys this week on this anyways, but as far as, what are our options to get this gentleman out of the house? Are we able to do an eviction right now or no? I mean, we can do the eviction, but it sounds like we can't get him out of the property yet, huh?
Well, you might be able to. Where's the property located? That's the first thing I would ask. Is it in Broward?
Yeah, it's in Broward, Tamarack. Yep.
Okay, so it's in Broward. And was there a lease on this property?
No.
Okay, so this person, the first thing I do is I'd see if this person is a squatter, because there's a difference between a squatter and a tenant. Was there a paying tenant before?
Never.
Okay, so this is a squatter. This does not fall under the moratorium. So we would use a different statute, Chapter 82, which is the squatter statute, unlawful detainer. We would give them a notice telling them that they need to vacate the property within 7 days or whatever. It's not really a statutory notice. It just puts them on notice that they're supposed to leave. And if they don't leave, then we file an unlawful detainer. They're going to, of course, file an answer and say CDC applies and so on. But it really doesn't matter, because with unlawful detainer, you just have to be the owner of the property, or even the lessee of the property. You could be a tenant, and you just have right to possession. And that's all you need to present to the court, is that this person has no legal right to be in the property. There's nothing that's going to protect them except if they have an interest in the property itself. So you can get rid of that person relatively easily, because the writs will be executed for that one.
Okay. And guys, obviously, I'm not just asking Conrad this question, like he and I are just having a conversation right now without everybody. I know I can get him on the phone tomorrow. I wanted to ask the question simply because, first of all, it started happening today, so it was kind of fresh on the mind. Plus, this is a situation that we've gotten calls at our office of people asking these things. I mean, we always revert them to Kelley and Grant and say, hey, call the attorneys, because Anish and I don't want to be liable for giving, advice. We always say, we're not accountants, go to Jose Ramirez. We're not attorneys, go to Kelley and Grant. But it is sort of a general question that, a lot of people are asking, what tenants do have rights, what don't, what people that have rights that are squatters or anything else. So
landlords do have a lot of options. They're not completely stuck, but we need to analyze each situation. So there's some landlords who just believe they can never get rid of any tenant, so they do nothing at all. 10 months later, or 7 months later, they haven't done anything. So they need to be proactive and get the ball moving.
Yeah, those landlords need to sell us those properties. We'll take care of it.
Yeah, exactly.
I'll keep my eye out. There are many of them actually who are throwing their hands up and they're saying, I'm done with this. I'm selling. I can't do this anymore. And there are quite a few.
All right.
Well, that's why we love the Tired of Being a Landlord campaign.
We need to talk to Conrad. What's lunch look like for you? What's a bottle of whiskey?
Well, I'd be doing my client a service. If they tell me they're trying to get rid of their property,
there you go.
and I say I have a possible seller, or a buyer, I think that's fine. So I'll keep my eye out. Give me a call.
Yeah.
This is like real life networking. Look at this, man. I thought we were talking about 2021. We're talking about doing our own deals. We'll use Kevin. We might borrow some money from Paul. This could be a win-win for everybody.
Conrad's number.
There you go. So, and that's actually a perfect segue, because one of the other hot topics for tonight that a lot of people were asking us leading up to this meeting is what is going to happen in the hard money market. So Paul, as far as lending goes, okay, so I know that you know, when the moratorium or, you know, the pandemic started and we were all, you know, sent home back in March and April, and one of the first things that Anish and I got from our hard money lenders was emails saying, okay, we're not actually lending the amounts we were lending before right now. We kind of pulled back. But it only took a month or two, and then everybody pretty much, I think, came back to their normal. But what do you see in 2021, Paul, as far as lending goes? Are you going to be lowering rates? Are you going to be raising rates? Or, you know, is lending happening as much? Is your criteria, you know, more stringent than it was before?
No, actually, there's so much money available right now. Nationally, locally, rates are coming down. Criteria is lessening. But it did freeze. Back in March, it froze. We were taking collateral that, but now it's wide open.
Like what, give us an example. Like I got a single family house. I got a little bit of experience, or no, actually I'm a newbie.
Okay. Well, that's a whole different story.
Okay.
Here, I'll give you an example.
Yeah.
I'm closing on one Friday for a regular customer. They've done a half a dozen with me. I'm giving them 100% of the purchase price. And my only complaint with this customer is they pay it off in 90 days. They turn them too quick. So experience plays a big factor in your rates and in your LTVs.
What about like a normal, I've only done one deal, right? I took an online YouTube course. I bought it at an auction and I overpaid for it. And now I need the money from you to lend on it. What would you lend, like loan to value?
Loan to brand new, the way you describe it, I probably lend 70 to 75% of purchase.
Okay.
And 60% of ARV.
And
I would also lend the rehab money if they could show me that they had the ability to do the rehab.
Do you want to explain what ARV is, fancy man?
After repaired value. All right, here's the scenario I do. If you're buying a house for $100,000, you're going to do $50,000 worth of rehab, and at the end of that, it's going to be worth $200,000. I will lend a maximum of 65% of ARV, which would be 65% of the 200, which would be $130,000. I would lend 80% of the purchase price, which is $80,000. And I would lend 100% of the renovation cost done in draws. The renovation cost is $50,000. The purchase is $80,000 loan. Miraculously, it adds up to 65% of the ARV. But those are the basic numbers I look at.
And what do you charge? Because I know you need to make money, right? It's not free.
It all depends on the
anything in this. He charges you.
It depends on his track record, the experience, how much equity is in the deal.
So like what, like 1 to 3 points?
1 to 3 points. 1 to 3 points.
What kind of rate are we looking at?
9 to 12.
9 to 12. There you go.
9 to 12.
And the second part of that question, just because I always get this too, is like, oh my God, it's 12% and all this other stuff. Like, do you want to talk about what? Like
12%. 12% is 1% a month.
Right.
So if you're buying a deal that when all is said and done, you're making 20 to 25% on it.
Right.
That job should take you 4 months, maybe 5 months. It's going to cost you 5% in interest to make the 20 or 25%. If you don't want to pay the interest, that's fine. You lose the 25% on the profit. But the interest you pay is a commodity, just like the 2x4s or the cabinets you buy. It's a cost, and it's not that much.
Yeah, that's what I always joke about it. I know, you've been in the business for a long time, and I know in the '80s wasn't interest 17% and 18%, and like the money's short term. So like when people tell me, like hard money's too much, if you want to expand your business, unless you're Paul's Bank of America or Anish's Bank of America, still Bank of America, I don't have unlimited amount of money. So you got to leverage.
And that's the key. What I tell people that buy it with their own money is they buy one, they don't borrow any money, 6 months later, they've fixed it and they've sold it. I tell them that if they leverage their money, they can do 3 houses in that same period of time. And although they make a little bit less on each house because they pay interest, totally they make twice as much. And an intelligent investor understands leverage. And I will, when I vet a deal, I make sure that the investor doesn't lose, because I want an investor to win so that he comes back for more and more loans.
Of course. Absolutely. Good.
Leverage is a good thing, used wisely.
Yeah. So obviously, Paul is dealing, his clients are predominantly rehabbing properties. And another, topic that we wanted to cover tonight was a lot of people are asking us between wholesaling properties and rehabbing properties. So, to hear from Kevin, we got the largest title company here in South Florida, and his, the closings that they do would be a good representation of that. So Kevin, give us a percentage wise of all the deals that, that closed maybe per month or maybe, last year, what percentage were wholesale deals and what percentage were your end buyer rehabbers?
Absolutely. Thank you. So those of you that have heard me speak before know we have a unique business model because we haven't focused on just one area. So I know like Ryan and Anish do a lot of short sales. They work with a title company that does strictly short sales. We definitely have a broad spectrum of our business. So we work with a lot of real estate agents. We work with a lot of lenders, a lot of wholesalers, and a lot of rehabbers. So we have a great pulse on the market to see what people are doing. I will say our wholesalers are having some of the best years they've ever had. Maybe the profit margins are slightly a little bit less than they were. There are a few more people involved in the deal, which means that if a wholesaler is flipping it, maybe there are 2 or 3 people involved in a joint venture agreement. So I would say, if we're doing, let's say, 75 deals in a month, I'm going to say probably 40 of that are going to be refinances, because the refinance market is booming right now. Just like you heard Conrad say, that's kind of one of the things that helps survive a lot of the title companies. But then when you flip it over to the investors and what they're doing, we are seeing more wholesale deals than rehabbers. Now, one of the unique things we do is a lot of times we do both of those closings. So a lot of times we're doing the flip and we're doing the closing for the rehabber. And then we get to do the closing when they actually fix it and then reflip it. So we are seeing less. We're seeing less people that are getting hard money, less people that are keeping properties. A lot of the people that are buying them to rehab them are the cash buyers. So we're not seeing as many hard money loans getting done as we were pre-pandemic, which is a little bit of a sign that hopefully that is going to change. But there was a little pullback, a little bit tightening of the money, a little bit tightening of the experience. So for the newbies on the call, people that have never done a deal, I always say wholesaling is going to be your best bet right now. It's going to be low money down. You don't need that much out of pocket. And you can get in a deal. And like Ryan and Anish said, I mean, you could make 50 grand on a wholesale deal if you find the right deal, if not more. So we're definitely seeing mostly wholesale deals compared to what we were seeing for rehabs.
What's interesting is that we obviously did less wholesale deals this year, but in 2018, 2019, Anish, myself, and our students' deals, our wholesale deals were averaging $25,000 per wholesale deal. Now, I know some of you got YouTube University graduates that are watching this right now. Pay attention to all these gurus around the country and their wholesaling and assignment fees for $5,000. I'm not making light of making $5,000 on a deal, but when you do wholesaling right, you should be making a lot more than $5,000. So this year, if we actually did less wholesale deals, obviously, during the pandemic, but I'd say our average this year, if I'm thinking about it, I was looking kind of earlier, our average has got to be closer to like 40 or 45,000.
We've had some massive numbers. I mean, it's been kind of crazy. There's a lot of people out there that have access to money that have no idea what they're doing. So, like, I know, like, between these panelists and everything that you always see online, how many of your, or bigger pockets, how many of your friends brag about how they lost $20,000 or $30,000 on a deal?
Right.
Ryan and I, we get those calls 2 to 4 times. I know Paul looking at deals, and I've heard you say it sometimes, how in the heck are you going to make any money on that? Right? It doesn't even make any sense. So there's a lot of people out there that are buying stuff that are just overpaying. Their exit strategy is all wrong, or they did a rehab. I talked to someone, one of our members did a rehab 8 months. They made $1,000 after 8 months on a rehab. And what they told me was, what a great learning lesson I had. Okay, I'm all set. So like, I'm not really, again, our numbers. And then the other thing is, I was just going to add, especially with National RIA, what we see talking to other RIA owners is that when we tell them our numbers, they almost have a heart attack. When we tell them that we're wholesaling and our numbers are this high. And I know you guys that live down here, you're saying it's too competitive, it's too hard. These people that from around the country, Ryan, you've heard it too. You guys have it so easy. All those foreclosures, man, it must be so easy. So I think it's just the point of view. When people ask us how the market is, I'm like, man, it's pretty awesome. And it's because we're doing deals. 2008, when I wasn't doing any deals, it was pretty bad. So
I think I think part of the thing to also remember is that, this YouTube University, I get at least 2 to 3 calls a day. I got 3 calls today from the person that I know was on some guru they took some online university from someone in another state, and they call me and they say, we Googled you and found you. We want to see, are you investor friendly? And they have these template questions to ask. And I know exactly where they came from, and I know exactly what they're not going to do. They're never going to call me with a deal. They sit on the phone for an hour with me and they'll never do a deal. But for some reason, when your students call us, they're doing deals, the people that come to your boot camp. And I think part of that just goes to show because, you're actually doing deals yourself. So if people are on this call, like, start screening a mentor that can show you the deals they're doing, show you the checks that they're making, show you the students that they're teaching, as opposed to what you see on YouTube in the middle of the night on that ad that someone put in front of you at 3 o'clock in the morning. So just be super careful with that stuff, because I get the calls every day. And if we're doing 75 to 100 closings, we're seeing who's doing what and how much money they're making. And you guys are crushing it compared to these people that, they're lucky they make $1,000 on a deal because they just don't know what they're doing and that they weren't trained properly. So it's worth it to get the training now so you can make that money later.
Kevin said something too. We concentrate a lot on people facing a foreclosure. That's really our area of expertise. We do all kinds of different deals, but that's the low-hanging fruit, guys. We live in one of the #1 markets in the country, and fortunately and unfortunately, we have more foreclosures down here than pretty much anywhere else too. Maybe some other pockets in the United States, but one of the other deals that we've seen a lot in 2020 that's really kind of popped up, that really kind of surprised us, was reverse mortgage short sales. I think we have like probably there's 5 or 6 just right now on the board. Just right now, we've already closed several too. Reverse mortgages, for those of you guys that don't know, is simply where someone that is as of can I say age in life, a more advanced age, can take the equity out of their home and be paid that, back out of their house from their mortgage company, so that's sort of like a salary or something that they have, when they retire. The unfortunate thing is that it's not exactly the best financial decision to make. If you ever see a commercial at about 2 a.m. With Wilford Brimley, the old actor, or even Tom Selleck now is doing them. Any washed up actors that are doing infomercials at 2 a.m. are probably selling some really crap products to you. And these are reverse mortgage companies. The reality is that the problem is that, grandma, now she, her family can't, financially help support her. Her roof, her AC is going. She's got a plumbing issue. She has no money to fix it. And there's no equity in the house for her to pull out to be able to fix anything. And she has to pay the insurance and taxes as well. And a lot of people default on that because they can't afford to pay them. And now they're going to lose the home and there's no equity left for them. So that's a reverse mortgage short sale, because if the lender, has a $350,000 that they're owed, but we're only going to buy the house for $2 million, then obviously we have to do a short sale. And it's actually pretty easy on reverse mortgage short sales. The mortgage company does an appraisal, has the property appraised, which we try to influence as much as possible with an inspection report. The condition of the property has to be taken into consideration when we're talking about the value of it. And once that appraisal comes back, we basically have to offer either 95% of the appraised value. Most companies are 95% of the appraised value. I don't know why they do an appraisal and then only take 95% of it. I don't know what that system is, but we're happy to pay a little bit less than 100% of the appraised value. And that closing can be done pretty quickly. As a matter of fact, Independence Title has closed 3 reverse mortgage short sales for us in the last month or two. So they're pretty easy deals to do. And there's a lot of people out there that are hurting and need that. And because we have such good margins on our wholesale deals, a lot of times Anish and I will even put on the HUD and have a relocation for the homeowner because they need some money to be able to relocate and find another place to live. So it's kind of a win-win situation, but that's something else that we've seen in 2020. I don't know if we're going to see even more in 2021. Most likely we are. We have seen an increase in pre-foreclosures, and we're kind of monitoring that right now. For those of you guys that don't know, there's a program called REIFAX, REIFAX. And if I could have my staff put that in the chat for you guys. By the way, we do have our staff members that are monitoring this, and either Anish, and we'll put information in the chat for you guys, any resources that we talk about. So REIFAX is the #1 deal finder. It scrubs public records, the clerk of courts, property appraisers, taxes, tax collector. So we know every property in Broward, Dade, Palm Beach, every property in the state of Florida, how many beds and baths, square footages, who owns it, what they bought it for, how long they've owned it, what properties are being sold on the MLS, what properties are in foreclosure, what properties are probate, what properties are behind on taxes. It's an incredible software program that literally Anish and I have used for 10 years. And we probably have gotten about 95% of our deals from REIFAX, maybe even more. And it's been amazing. So that's one of the things that we're monitoring REIFAX now, and we're seeing already an increase in those foreclosure notices.
Absolutely. And you know what I'm going to do is I'm going to start getting to some of these questions. So Jose, you're on board #1. Can Jose speak about the PPP program and how it might help investors? So what have you heard?
Yeah, so part of the second stimulus, the PPP, the second round of PPP is available for those who had a decline quarter to quarter from the prior year in excess of 25%. So if you had a decline 25% or more, you qualify for the PPP, you can apply for it. That's going to be done through the banks. And I can tell you that I spoke to my banker to learn more about what they're doing. And they're still waiting for instructions from the SBA. So they're a little behind, but eventually in the next couple of days or maybe a week, it'll be ready for access, so just reach out to your bankers.
Yeah. And what should they also reach out to their accountant to have the right information?
Well, very important. You're going to have financials, right? You're going to have to show proof of your decline. So it's going to be a little harder to get the second round of PPP. The first round was very easy. You just, submit your pay stubs, your 941s. But this time they're going to want financials. So if you don't have your financials up to date, you're going to want to take care of that. So you can reach out to us. We can help you with that.
Awesome. So I know some of you guys are actually landlords. So Ed's asking, you thought about evictions. Why evict tenants when the property will likely sit vacant for a while? Isn't it better to work out repayment plans with existing tenants? So I know Jose, you're a landlord. I think Kevin is too. I'm not sure if Conrad, if any one of you guys want to.
I'll take that on. So we do have a lot of our landlord clients working out deals with tenants. In fact, the vast majority of them do work something out or try to work something out. But there are people moving to this state, and there are people who are looking for property to rent. There is actually a shortage of properties. So when you have a non-paying tenant, you want to move that person out. So then you can put one of those, new tenants into the property. And that's what a lot of landlords are trying to do. They always come to me and they'll say, I have someone ready to move in on January 1st. What do I do? So the property is most likely not going to sit there vacant for a while. And number two, a lot of landlords are working something out with the tenants. We start the eviction because it forces the tenants to take action. Otherwise, they don't really have to do anything. Moratoriums say you don't have to pay. So most of them sit there. But once you tell them, hey, I can still get a final judgment and you'll have a hard time renting, they start making things happen.
Perfect. And actually, I got a follow-up question because this is for you too, from Dee. She's asking about, I know you were talking about Miami-Dade. What would be the workaround for the right of possession in Miami-Dade?
Oh, for the writ of possession, unfortunately, there's no workaround because that's state law. It's mandated that only the sheriff by statute can remove persons from property. So there's no way around it except by trying to work something out with the tenant. You know, for example, I have an attorney who came to me and he said, listen, my client will move out January 15th if you just drop the suit so they don't have an eviction against them. And I said, done. You know, so that's a workaround, trying to work something out with the tenant. But other than that, you're stuck. You cannot go and change locks. That's illegal. You have to wait for the sheriff.
Good answer. Yeah, that's good information. Jackie's asking a question for Paul. What's the longest you'll hold a hard money loan for? And do you lend money for rehab only? Two-part.
No, well, I'll lend money for rehab, but it's got to be a first mortgage. So you have to own the property free and clear. And the longest is, as long as you pay the interest, I'll loan money for a long time. But I'll tell you this, you can't profitably pay this kind of interest over the long term. So if you've got a 12-month loan and it's 9 months coming up and you haven't sold the property, I'm going to ask you what the problem is. Because you can't profitably make a deal paying 10 or 11% interest over a long period of time.
Absolutely. And did you also want to maybe touch on that? What, like, it can't be owner occupied. You know, like,
it cannot be owner occupied.
Okay.
Because owner occupied, you have to have a special license to do that, but you also have to vet them to such an extent that this is why it takes 60 days to get a bank loan, because you have to be vetted so completely.
Got it. Yep, absolutely. And so Raj is actually asking, how do you get possession after purchasing a property from the bank that is occupied? So maybe, have you had some of your clients that maybe bought at the auction?
Yeah.
Or maybe
yeah, I can handle that one too. So you said foreclosed property, right?
Correct.
Okay, so that's called a motion for writ of possession. So now we have this writ of possession issue, but let's pretend that doesn't exist. Before COVID, a lot of our clients would buy foreclosure properties and they'd ask that question. You have to reopen the foreclosure case. So when the judge ordered a final judgment for foreclosure, the final judgment stated that the court reserves jurisdiction to issue writs of possession. So all you do is you reopen the foreclosure case and you say, Judge, I'm now the owner of this property. I'm asking you to issue a writ of possession. The judge will set it for a hearing. We make our statements that we own the property. Here's a certificate of title, and it will get granted. Then it goes to the sheriff. The sheriff removes the person from property. It's a pretty straightforward, easy process. But right now, as it stands, we're running into that sheriff executing the writ of possession issue.
Perfect. Good answer. Good information. Hey, Kevin, the question I got for you is, what's the difference between an investor-friendly title company, an attorney, or just a regular title company? Like when people ask, or we always state that you're investor-friendly, I thought all the title companies were created equal. I'm kidding, but you want to explain why you think?
Yeah, I mean, they're definitely not created equal. And I think the number one thing that would set one apart from the other is the experience. So, you know, if you were to call myself or Stephanie or Amber in the office or Iris in the office, and you're going to talk to them about land trust. Like I had a lady call me today and talk about a property she put into a land trust that she didn't name the trustee. And she's like, well, I don't know what to do. And I don't know, you know, how this was done. And I said, okay, are the trust powers on the deed? Why isn't the trustee named? Do you have a copy of the original trust? So I think part of what sets one apart from the other is just having a better understanding of how to work with investors, how to make sure we understand, you know, how do you close a deal using an assignment of contract without making it glaring? You know, a lot of title companies point out this glaring assignment of contract fee. They almost try and kill the deal. You know, so part of that is you just need to make sure when you're working with a company, you want to make sure that you're working with someone that that can handle your deal and understands the deal and knows how to massage that deal across the finish line. Not every deal is easy. It's not going to be a simple cash deal, close in 30 days. You know, some deals will have hiccups. And I always tell people, you know, when we talk about like how to use the real estate contract, they say, can I use this one-page contract on this course I bought online? And I'm like, you can use it. The problem is when you're going to go to the attorney because you need to defend a claim against the deposit, you're going to have a problem with that one-page contract versus the standard FAR/BAR contract that everyone else is using. You know, so if the closing goes smooth, you can use an attorney, you can use a title company, you can use an investor-friendly title company, but you want to make sure you're using someone who's not going to kill the deal, someone who can get the deal across the finish line, and more importantly, someone that has the staff to be able to handle a deal. Like I just sold, for those of you that follow me on Facebook, I sold one of my own houses because I bought a new one. I sold the one I was living in, and it was a nightmare of a closing. It was one attorney and one closing agent in his office, and it was the worst experience ever. So we have 10 people in the office that can pick up a deal at any time and handle it, answer any questions, go meet the clients to close it. So, you know, they're not all created equal, and it's who you choose to do business with and that relationship that is most important.
Guys, I can tell you this, we've had deals that we had, you know, kind of a newbie buyer that came in on the deal, or they were an experienced buyer but were living in another state, and they didn't really necessarily understand like the structure of how we were structuring the wholesale deal, and their title company is saying, oh, this is illegal, this is illegal. Well, the reason why Kevin Tacher and Independence Title is also one of the #1 friendly title companies is because, first of all, Kevin's never going to do anything illegal because he knows this business so well with his experience that he can take a look at the deal and figure out how we can legally structure the deal and get it done. We moved probably, I don't even know how many deals in total that we have moved over to Independence from other title companies because the other title companies just couldn't get it closed. So, you know, that's one of the things that makes a big difference.
If I can throw a plug in for Kevin.
Sure, go ahead, man.
I'll send you
Kevin,
the $50 later.
I'm sorry?
I'll send you the $50 later. Go ahead.
Yeah, no, I ran a refi deal through Kevin. They had a bankruptcy and a foreclosure and a lender, and it was so bad that I had to apologize. But they got it done, and I'm sure any other deal, any other title company would have given up on it. That's the good news. The bad news is, Kevin, I'm submitting another one from the same lender and the same borrower from you to do, and it was only a month ago.
The next time Paul calls his phone, it's going to go, doo-doo-doo, this is no longer a working number.
But I'm telling you that Kevin can
Here's
get
a
deals
lender
done.
that had no clue what they were doing. They were totally clueless. They're asking questions that I'm answering, and they're like, no. And I'm like, what are you talking about? Get your head out of New York. This isn't New York real estate. You have no clue what you're talking about. You're asking the wrong questions. Maybe that's what you do up there, but it's not how we do it down here. You know, and you have to kind of walk them through this process. But like Paul said, any other title company is going to give up on it because they don't know. Like when you ask them, what is a marked up title commitment? And people are like, I have no idea. And we're like, oh, here you go. No problem. So you know, it really is important who you choose. And it goes to anyone, whether it's your taxes, whether you're choosing a foreclosure attorney, an eviction attorney, a hard money lender, or a real estate mentor. You need to do your research and pull people that you know, like, and trust, that have an experience. You know, they don't have one review on Google. They have 100 reviews on Google. They know what they're doing. They have success stories, you know, because it's that one deal that goes bad that is going to cost you thousands and thousands of dollars when you may only have that money to start your first deal. And imagine you lose it. So just be careful who you do business with. But, you know, the people on this call know what they're doing. And those are the people you want to surround yourself with.
Yeah, it's the same thing with attorneys. Not all attorneys are created equal. I can tell you I've had so many law firms and attorneys that don't get back to me. They're all like, oh, I've been in court all week. Sorry, I couldn't answer your email. That's one of my favorite things about Conrad Grant and Jaron Kelley, their law firm. they get back to us. I mean, I was working with Corey on one of the attorneys there, Corey Corrado. I was working with him on one of our deals. I think he was on vacation. He was up in the mountains. He was like, sorry, I don't have great reception, but he's like answering my emails at 8 o'clock at night. I mean, you just don't have the same thing. That's why, you know, for us, that's why we want to bring, you know, also to your guys' awareness is the people, this is our power team. These are the people that we go to. And like Jose said, he formed 2 corporations for me, and one of them, he was, I think, on vacation while he did it, but he got it done for me because he knows the value of the business that we bring, and vice versa. So you guys got to surround yourselves with the right people. We're not saying that, you know, Kelley and Grant is the only attorneys out there. We're not saying Independence Title is the only one out there. We're not saying Jose is the only accountant or Paul's the only hard money lender, but these are some of the best in the business that we do business with. And we do business with them because Anish and I have vetted hundreds of title companies, attorneys, hard money lenders, short sale negotiators. You know, we've already made all of those trials and tribulations for you guys. So you're welcome. Anish, we have like maybe a last question here before we go a quick round robin.
I got one last question. This is from Francisco. Coming into 2021 as a landlord that owns multiple units, free and clear with good paying tenants, will it be a good idea to sell a few properties now in expectance for a market correction? So what would, you know, Jose, I know as an accountant, what would you, if that was one of your clients, what would you say? Or Paul, or?
I would say
I always
refinance.
say it depends, right? I mean, it depends how much you're going to be paying in taxes, for depreciation, capital gains, and all that. I mean, depends on what you're going to profit on it too. So it's never a cookie cutter response, right? We have to analyze the whole thing.
Okay, Paul, yeah, I know you had something to add.
Yeah, I would say refinance it now while rates are low. You still keep the property, you still get the appreciation, you still get the depreciation, you get the mortgage paid down, and you get the positive cash flow. And you still have the property, and you still have the cash in your pocket. Whatever you were going to sell it as, you would have a large portion of that cash to do whatever you're going to do.
Absolutely. And I would just add to that also is that to try to, you know, time quote unquote the correction, good luck. I mean, there's no way of really doing it. There's a lot of great deals out there. So you could always just add, right? You know, like I agree with Paul, and I'd probably refinance, take advantage of the low rate, find something else, find an off-market property. You know, maybe it's a probate, maybe it's a short sale, deal directly with the owner, add more stuff to your portfolio. So, I mean, there's, you know, if you do want to sell it for a good price, I mean, you know, Ryan and I will pay cash.
Absolutely.
We'll make sure it's fair.
Yeah, if you're motivated to sell. So listen, before we, what we're going to do is we're going to end the meeting, and everybody's going to kind of give their 60-second on what people need to do to prepare for 2021, that sort of thing. But very quickly, just want to make kind of an announcement. We have added to the Bria family. For those of you that have been with us, you guys know our office staff. We have, as always, our head admin, Jeslyn, who is on here tonight. And then Alexa is our new manager. So we wanted to just say hello to Alexa, let her show her face, say hello to everybody. We're very happy to have her on the team.
Hi, everyone. Good evening.
Welcome.
Welcome, Alexa. There goes the soft jazz.
Yeah.
Every time.
Yeah, Alexa's been with us it's only been like a couple of weeks. We actually threw her in the mix over the holidays, and but she is now the general manager for our organization. So she's going to be dealing, especially with you corporate guys. Anish and I, you know, we're going to be on vacation. Alexa's going to take care and straighten you guys out for sure.
Yeah, she'll actually provide good service.
Yeah, exactly. So, so I just wanted to introduce her to everybody, since you won't physically meet her right now, but hopefully later this year when we actually start having our meetings again at the Signature Grand. So we're very happy to have Alexa as part of it.
And before everyone's final round, also in the chat, we did talk about January 14th and the 16th. There are links on there, so just click on the link. It's for free. Remember, we're going to give away a free boot camp also, so make sure you sign up. I know it's not up on our calendar yet, but it will be up on our calendar by tomorrow morning. But you can.
Yeah, we had some updates on our website. Google, our SEO expert, is telling us, you know, Google's made some major changes and stuff. So we've had calendars disappear on us and things like that. But We're going to have that all straightened out, so it will be on there. Plus, we will be adding events to our calendar over the next month or so, and we should be pretty much having 2021 on the calendar, so you guys can see all of our upcoming events. We're doing the same thing as everybody else. We're waiting it out to see when we're going to start having our physical meetings. We would literally be at the Signature Grand right now. If this was 2019 last year, we had a little over 250 people at the Signature Grand. You would be meeting all of our corporates in person because we do our networking event first, tabletop with a nice spread of food, and the bars, of course, always open with some nice music playing. And then we do an educational half hour from 6:30 to 7, and then 7 o'clock is usually our meeting that we have like this. So hopefully we'll be able to see you guys in person. So really quickly, just to end things up here, I'm just going to go from top to bottom and have everybody put their quick 30-second on what what our audience, what do you think that they should be expecting for 2021 as an investor or a landlord? What do you think they should be prepared for? So Jose, let's start with you.
Man, the magic ball, right? What is it?
Crystal ball.
Crystal ball. There you go. It's so hard to say because with these moratoriums being extended, you don't know when these people are going to be out and everything else. Taxes are going to be changing. Biden's got a plan to change taxes, but that may be held until the economy stabilizes. Nobody wants to raise taxes when nobody knows what's going on yet with this pandemic. But plus it's going to be a little bit of a waiting game. Meantime, we're still our clients are still working hard. They're still, but tax-wise is going to depend. Tax-wise is going to be strategy-wise is going to depend on what happens in the next couple of years. I don't think any tax changes are going to happen between the whole year of 2021, maybe 2022 if the economy stabilizes, but not for 2021.
And we usually do a special workshop or seminar, webinar with Jose in March. So he's probably going to be doing something in March, right before tax season. So whatever changes and stuff, stay tuned to our calendar because we'll put that up on our calendar. So Paul Regan, 30 seconds on what people need to do to prepare for 2021. What would you be doing if you were flipping properties instead of lending money?
Liquidity is always good. If you have properties now that you're holding, I would refinance them, put yourself in a good liquid cash position, because I think there's going to be a lot of buying opportunities once all these moratoriums are over. And so my advice would be, if you have equity in properties, pull it out, put it into cash. Interest rates are low, and then you'll be ready for when the moratoriums are over.
There you go. Kevin Tacher.
I'm going to go back to the word that Anish said, which is pivot. I can't really tell you what to do from, you're not going to use my services unless you're buying a deal. We know deals are going to come, but I can tell you as we're coming through this global pandemic, if you truly buy my book, and I don't really make money from my book sale, but if you go to Amazon and buy my book, I tell people all the time, like, buy it and read it and practice the techniques that I put in there, because that is what is going to help you survive the pandemic, survive a market correction, whether you're on the foreclosure side, the short sale side, the landlord side, the rehabbing side. You need to set your business up. And I think that's one of the problems that a lot of investors make, is they're just always worried about the next deal instead of setting up the foundation for running a good business. So I promise you, if you buy the book and you read it and you understand it, you can call me and ask questions on it, but you need to set up your foundation now. So this way, in a month or 2 or 3, when this moratorium gets lifted and now these deals are flooding the market, if you have a good pandemic and recession-proof system built, you're going to survive and thrive throughout the next several years in this business. So that's about the best advice I can give you.
No doubt. And Kevin wrote that book, guys. He came out of the crash losing everything just like Anish and I did. And that's based upon that experience. It's over on my bookshelf over here. I thought it was right here. I was trying to reach for it. But yeah, great book. Great help. Thank you, Kevin, for that. Conrad, Mr. Grant, what do you think about 2021? What should, all these landlords just kind of wait it out?
2021, well, I mean, you really have no choice but to wait it out. But I think there are certain things you can do. Make sure you screen your tenants. There's still tenants coming in. Make sure you screen your tenants properly, because that's going to set you up for the future. Because even though things seem dire, the majority of people are still paying their rent. You know, most of my clients are still getting their rent. Those who own, you know, 1,000 apartment units, they're getting majority of their rent. So people are paying. You need to be strict though. You need to, if you are the kind of loosey-goosey landlord, you need to tighten it up. You know, if tenants are late, you need to serve them that 3-day notice immediately. But at the same time, you need to be prepared to be flexible, because this is, you know, the pandemic is still around. So you need to be prepared to be flexible. You can go in ready to fight, and the tenant's gonna say, well, I'm not gonna pay you then. You know, you go in with your fists rolled up, that other person's gonna roll their fists up also. So you have to be prepared to be flexible and give a little, and maybe you'll get some of the rent, maybe you'll get all of it, who knows, but you have to be prepared to be flexible. Yep. Put a great team in place. Always, you have your maintenance crew, you have everybody ready to go, and that will help you for 2021. But just be prepared for those extensions in moratorium. I'm going to be realistic with you. You have no control over that. You're going to have to prepare for that.
Absolutely, absolutely. Anish Dave.
So for me, yeah, it's you know, for 2021. First of all, I want to, you know, if you're on this call, you made it through 2020. So you're already a step ahead, is number one. Number two is, you know, I mean, we talk to so many people, and, you know, a lot of great people, and they've lost a lot of their jobs and their hardship, and they've been wanting to get into real estate. What I really root for 2021 is for you to finally get off the sidelines. I mean, we've owned Bria for about 8 years. I've met hundreds of great people, and they want to get into real estate. They're still on the sidelines. They haven't even looked at a property. They haven't walked a property. They haven't made an offer. What I feel, you know, what the pandemic's taught me, this is the time. I mean, we don't know when our time's up. What are you going to do, you know, when the next big thing happens? No one else is really going to look at your business the way you are. So, you know, we've been very fortunate, you know, thinking, you know, our mentality is there's enough room for everyone to make money. So we believe that there's unlimited amount of deals. What usually happens is, you know, people think there's not enough. There's no deals, there's no this. And that's when the panic comes. That's when you start making mistakes. So if you think your foundation is, hey, I'm gonna, you know, really take control of my life again. And that's the way, you know, I really root for people, is that I want to, you know, you don't have to do deals with us. It's okay. You know, we want you to have your why be strong enough on why you're doing this business, right? Is it for your family? Is it for future generations? Do you want to leave a legacy? And once you get that why that's strong enough, everything falls into place. So I think 2021, you know, is going to be a fantastic year. And, you know, and what I really push is action on your business, on your health, and your family. So.
Yeah, so I'll end with, it's interesting because Anish and I, you know, being in real estate, he actually got me into real estate 20 years ago, but we've also done other types of investments, and the other investments have not usually worked out as well as real estate has. Since this pandemic, actually since about 1.5 years ago, I've been in cryptocurrencies as well, investing in cryptocurrencies. And I've done very well this year. I've profited in the 6 figures, so I'm very happy about that. But Bitcoin dropped to $3,000. It is now, last time I checked earlier today, at like 35,000. And when I think about that, you think about things like the gold rush, or you think about the crash of the market in 2007 and 8. You think about if you had the knowledge and the experience and you knew when the timing was right. If I knew when the timing was right for Bitcoin, I would have bought a lot at $3,000, and I might have been retired today. I might not be in this meeting. But I didn't know that. I didn't have the experience in that. What I do have the experience in is going through a crash of a market, a correction, people not paying their mortgages. What does that do to the real estate market? And here's what I can tell you, is that we are prepared now. For anybody that thinks that these banks, it's my personal opinion that there's no way that the banks just forever are going to be able to forgive everyone's mortgage payments. The world doesn't work that way. If people don't start making mortgage payments and banks don't start lending money, the entire society is going to collapse eventually. So that's going to happen. So mark my words, moratorium, schmoratorium. Unfortunately, at some point in time, people are going to start getting foreclosed on. People are going to start getting evicted. And we are the type of investors that are there to help clean up the mess and make a lot of money. If you're not involved in real estate, and this is the time now, you're going to look back a couple of years from now and you're going to really kick yourself in the ass for not getting into real estate. Don't be that person that's like, man, that opportunity was right there in front of me and I just never took advantage of it. You have all of these professional peoples, and between all of us, especially Paul, we have hundreds of years of experience. So take heed. I mean, we're telling you these things for a reason. So either listen or don't. But those of you that listen and reach out to us, you're going to be very happy that you did, and we're always happy that we can help anyone get started in this business. So I want to say on behalf of myself and the Broward and Miami-Dade Real Estate Investor Association, I just want to
I just want to add one little thing before you put that last thing.
Okay.
And I know we're talking about age a little bit. So we've had students that actually done deals as young as 17 years old.
Mm-hmm.
And we've had students that are in their upper 60s that have done deals too. So, don't let age or experience, stop you. So I just wanted to add that in. I know you were talking about older people like Paul, but
Is upper 60s old?
Hey, listen, in some ways, Paul is younger than people.
I didn't think it was old.
I'll just leave it at that. So listen, guys, Jose Ramirez, Advanced Tax Advisors, Chief Strategist, we greatly appreciate you attending tonight. Thank you very much. For any needs that you guys have in accounting or tax strategies, Jose is your man. Paul Regan of Flipper Loans, we greatly appreciate the time that you took this evening as well. If you guys need money, Paul is the man to see. Conrad Grant, Kelley and Grant Law Firm, as solid as it gets. So guys, if you are landlords, if you need a quiet title action, evictions, those sort of things, and Conrad, we greatly appreciate the time you took today to join us. Same thing, Kevin Tacher, Independence Title, #1 title company, guys. You're going to be doing your closings. Make sure Independence Title is going to be your title company. So on behalf of myself, the Broward and Miami-Dade Real Estate Investor Associations, we wish you guys the best health, best safety, and best success this year in 2021. We're here to help you make that happen. So thank you guys for attending, and we hope to see you soon.
hey guys.
Thank you guys. Good night.
Night.
Good night.